Okay, so we have saw some craziness in the market in the last couple days, and I know that that's resulted in lots of questions, some fear. So I'm going to record kind of a short video, some insight from multiple of our portfolio managers. Again, we have a team that's behind this, looking at everything, making changes as necessary. So I'm going to give you some updates, hopefully calm any fears and worries, and talk about what we're doing and what you should be thinking about if you're a client or if you're not a client of us. First, one of the things here is the pullback. The pullback that we're seeing, right now the S&P is down 17% since its peak in February. Okay. Now it seems like a lot and it's scary and crazy. However, pullbacks of this magnitude are quite common. If we looked at the average calendar year, there's a downturn of 15% every 2 to 3 years. Okay. So this is not something that is uncommon. It is something that does happen in the market. Actually, if you go back to our State of the Union address or the last quarterly update from our team at United Asset Management, they had been looking at this kind of along, saying, hey, the market had 2 consecutive years of 20 plus gains, okay, 20% more gains. It was looking significantly overvalued in some ways. And between those two things and the factor that there is policy changes ahead, we saw volatility coming. With that, we've talked again on the State of the Union about this. And just to reiterate, they've already been making, and we're already making some more defensive type positions inside the portfolios being managed by United Assets. So while this is kind of crazy, it's not necessarily uncommon to see market corrections like that, or market corrections slash downturns like this, nor was it necessarily unexpected because of where we saw the valuations, okay, and where they were at. Another thing, a lot of this has come with the tariffs and the new reciprocal tariffs that have been announced, and people are questioning that. And one of our managers, I thought, put a great piece out here on this. And he says, why? Why are, things happening like this? Why is Trump doing these things? And so he lists a couple reasons that I think is interesting to ponder. One, he talks about forcing the Congress to act. Anytime there's a big tax bill on there, a lot of tax benefits, again, on the campaign trail. One of the things was cutting tax on Social Security. There's been other mentions on tax cuts, and they're trying to get this new tax bill through. Not to mention at least keeping the rates from the 2017 Tax Cuts Act, where your current income tax rates are. But I think there's some other things too, better tax savings that they're looking at. Anytime you see something like this in the market, it sometimes pushes Congress to act faster to get this bill passed. You saw that in 2008, he mentions there. They were trying to get a stimulus package going. It didn't happen. The market tanked, and all of a sudden it got through. So could it be to force Congress to act faster on the tax bill? Force the Fed to act, okay? The Fed has a dual mandate there on keeping inflation low and keeping jobs then. We've heard a lot of been pressure with Trump on that they should be lowering rates right now. They've kind of not done it. So could it be to push them to lower rates? Another option is for trade. And I think this is important for the trade partners to act. A lot of the tariffs that Trump put out there, first of all, let's push back just a second. When he first announced it in the Rose Garden, and everyone thought it was going to be a 10% flat tariff, the market actually rallied and was up the next day. Okay, then we see their reciprocal tariffs, meaning whatever they're charging us, we're charging them back. Sounds, fair enough in that way. It's also been used as a trade policy. There's been multiple countries, up to 50 that I think that I've heard of, that have contacted, say, hey, we'll do negotiations. So there's a lot of these tariff policies that could lead to trade negotiations and help it with that. The bottom line that Tom put out there, again, one on our portfolio management team, is this. You can see the rationale for Trump's sledgehammer approach here, basically the art of the deal. Yes, it's creating a lot of uncertainty. There's meaningful risk, but there does appear to be a rationale, very important rationale, and with that rationale, positive effects that can happen. So once we get through this volatility, there's positives for economic growth. That said, I was reading a couple other things on this. The news always likes to lead with the negative news. And sorry, I'm going through a couple places, so I just want to make sure I quote things right. But, there is some positive news out there too. So with all these tariffs, the Coalition for a Prosperous America talked about a permanent universal baseline tariff resets the global trade environment and addresses the destructive legacy of decades of misguided free trade policies. So they're talking about this as a priority. Trump's decision to implement a baseline tariff is game-changing shift that prioritizes American manufacturing, protects working class jobs, safeguards our economy from advisories like China. This is exactly the type of bold action America needs. Again, this is from the Coalition to a Prosperous America. The National Cattlemen's Beef Association. So again, National Cattlemen's Beef Association says for too long, Americans, family farmers, and ranchers have been mistreated by trading partners. President Trump is taking action to address the numerous trade partners that prevent consumers overseas from enjoying the high quality American beef. So I saw something else about that was just, how much beef Australia can sell us and we can't sell them any. So again, here's some positives. We're seeing some results. Nissan abandoned plans to eliminate a shift in its Tennessee production. Keep me more here. General Motors announced increased truck production in Indiana. Let's see, another company, Guardian Bikes, announced it will expand production in U.S. growth-based investment. So there's a lot of things happening here. And CNBC even put it out there that a lot of the jobs have been from private companies. We're attracting larger investments here. So yes, there's some volatility, but there is some positive. And I know that the news often leads with the negative. So I just wanted to share a little bit of positive in the midst of all of this. Okay, so I thought those things were important to hit on. The other thing just that was said is where the market's at right now is kind of a tactical low. It's definitely being oversold, which is poised for stability. So, you see that today. The market actually was, I looked at noon today and it was down quite a bit. Then it kind of popped back up and ended above 5,000. So for a little bit, it was below 5,000 point value today, popped back up. Hopefully those things are signs too that we're hitting some stability. So what to do going forward? First, if you have portfolios managed with our team, here's what they're doing. Okay. As I mentioned, they had already been making a shift towards defensive based stocks. They did this before any of this volatility started because they were looking at what they saw is the market being, and especially certain stocks and sectors being overvalued. So they've made that already. They have raised cash in the portfolios. Okay. So they've already done that to be more of defensive based. Harvested losses. That might sound like, oh, that means they're just taking the loss. No, they're harvesting the loss out of positions that have had lots of gains in them to offset gains later. This is especially true for tax planning in the non-qualified accounts, but then they're repositioning things in the right way. Also can be taking off some gains off the table. They, let's see. Again, their tilt has been more towards uh, value versus growth this year, especially actually the end of last year from the State of the Union. They were making that shift and have been now. So they have been doing that as well. Some of the bigger positions, they have um, some hedges on them so that they won't just continue riding them down. So some buy stops. They've hedging their portfolios in gold. They're making lots of adjustments as needed as we're seeing what's happening here. Okay. So your portfolios with us are being managed. Volatility is to be expected. They're making the changes and continually watching it. Said I've just read from about 4 emails today from our portfolio management team from different areas, what they're doing, what they're seeing, what they're managing. That said, so if your portfolio is being managed with us, it is not time to worry. They're taking care of it. However, if you want to chat, we're always here to talk. We can sometimes schedule a call with one of the portfolio management team with Guy and talk through exactly what's happening, but they're managing it and looking at ways to reduce risk. If you're taking income, this is another thing. And we have a whole video on the retirement shift and how we protect retirement income. Your retirement income doesn't need to change. I was actually just talking with someone today and they got a message from their portfolio manager saying, hey, if you're taking 4% income now, you might want to drop it to 3. It's like, who wants to take less income in retirement? You're retired, you're taking the income, your lifestyle should not change because the market is volatile. You don't have to worry about that. Your income is protected with what we're doing and we're planning. Again, market volatility is part of investing. Okay, so they're making the right changes. I'm not telling you you're sitting and buy and hold and it'll come back. I'm saying our team is working. They're actively making changes. Your income is going to be protected. I mean, if you have questions, you can contact us. On the second note, if any with us, that is again, all of this is pertaining to red money, which is money in the market. Any of your green money, your protected growth money, that's any in the that we put into annuities, mainly annuities, sometimes life insurance, that is not subject to these market losses. Okay. Your account's not going to lose. If your policy comes due in the next couple of days, you might have made a little bit less than you would have before, but you are not taking any losses. That money is 100% protected and secure. You are not taking any losses. So again, green money, money that's in annuities, this market volatility doesn't affect it, okay? And returns are calculated based on the anniversary. The volatility in the middle doesn't really have that big of an impact, okay? It's how it is when it started in that anniversary year and when it ends. So that money is protected. Now, the last thing I will address is money that's not with us. So if you have a portfolio somewhere else, you have your money being managed somewhere else, well, you don't want to make quick emotional based decisions in a time like this. You also want to know that there's a plan. Again, if they're telling you something like, ah, just sit and hold, buy and hold, it'll come, whatever, or hey, you might need to take less income right now. Like, no, it needs to be managed to what is important to you. And it would be a great time to do a review. We've talked about this a lot. We're doing a lot of risk assessments right now to know how is your portfolio positioned to weather this storm? Are you positioned in the right way, or do adjustments need to be made? I'm not talking about selling it all out or, making an emotional based decision, but you do want to make sure you're positioned in the right way. And that's what a risk assessment will do. Is first let you know how much risk you have. And second, are you positioned in the right way to weather this storm? Okay. Makes me think about reading in Acts of all Paul's missionary journeys, and there were certain ports that they hadn't get here because it's easier to weather the winter in this port versus that port. And that's kind of what I'm talking about here. You want to make sure your portfolio is managed, put in a way it's positioned to weather this storm, whether it be a couple weeks, a couple months, whether a year. You want to make sure you're positioned to weather the storm and put in the best position to get the gains going back forward. So if you have accounts managed somewhere else, I don't want you to panic, but it would be a good time to do a risk assessment, see how they are positioned, and make those changes accordingly. Okay. So if you have questions on that, please contact us. Again, it should be managed to you. One final thought. Last thing I heard in the last week that made me go, things that make you go, we had somebody new coming in from one of our last library events, and they really just were looking for a review and that risk assessment. And they had said, this is what their advisor had told them. First of all, they never called them for a review, only if they kept calling them. And when they did get a hold of their advisor team, they said, well, your portfolio is meeting our expectations. And I was like, oh my gosh, it shouldn't be if your portfolio is meeting my expectations as the advisor. Is it meeting your expectations? We talk about that a lot with the personal benchmark and kind of setting it up to make sure that we are managing towards your personal benchmark and have protected assets using green money, red money together. But it should never be about beating the benchmark or making it to my standards. Is it making it to your standards? So if you've heard anything like that from your investment advisors, your financial advisors, take less income, it's meeting our standards. Oh, just whatever. It's there for the long haul. No, the long haul is important, but the short term is just as important. And they should be able to answer what they are doing now. And if you want, I can send you the detailed list of what our portfolio managers are doing. I just gave you the highlights, spared you all the analytical details, but the team is doing something to manage it. Again, so with us, you don't have to worry, but feel free to call with any questions at any time. If your account's elsewhere, this is very much the time that you want to get a risk assessment done. See what your risk is and how you're positioned to weather the storm. I'm sure we'll be chatting again soon.